Welcome to Investing Alpha, where insights meet opportunity. Today, NVIDIA is set to report its quarterly earnings tomorrow, and expectations are soaring. Positioned at the forefront of the AI revolution, NVIDIA is anticipated to deliver impressive results. With GPU production fully booked for the next year, the company's growth trajectory appears solid, allowing room to not just meet, but exceed guidance. If NVIDIA continues its trend of upside surprises, investors can expect a positive market reaction, potentially pushing shares past the 200 mark. While short-term volatility may arise from minor details, the company's competitive edge remains intact. The surge in AI workloads from major players continues to drive revenue and margins, with forward-adjusted valuations still looking appealing. NVIDIA is firmly categorized as a buy ahead of the quarterly earnings report. As NVIDIA's earnings approach, steady revenue growth is expected. The company is effectively sold out for the next 12 months, meaning its production capacity with TSMC dictates near-term revenue, making surprises unlikely. Analysts predict Q2 revenue at $45.9 billion, reflecting a remarkable 53% year-over-year growth. This figure is slightly below earlier expectations, but aligns with NVIDIA's conservative guidance strategy, allowing for slight exceedances without volatility. AI workloads from OpenAI, Azure, AWS, and Oracle Cloud Services are the primary growth drivers. Demand for GPUs is skyrocketing, with major hyperscalers like Amazon, Microsoft, Alphabet, and Oracle collectively raising capital expenditures to $365 billion, a staggering 64% increase year over year. This surge in spending is indicative of the ongoing digital transformation and the increasing reliance on AI technologies across various sectors, fueling unprecedented computational growth. NVIDIA's GPUs are at the center of this transformation, providing the necessary power for advanced AI models and applications. The company's ability to innovate and deliver high-performance chips has positioned it as a leader in the market. Given the high margins associated with GPUs and NVIDIA's pricing power, profitability is expected to rise alongside revenue. Q2 earnings per share is projected at $1.01, marking a 48% year-over-year increase, slightly above analysts' projections. This quarter appears potentially untouchable for NVIDIA, although market reactions could fluctuate based on minor details, which may still hold significance. An expected earnings move of approximately 6.68% is priced into options chains, reflecting the stock's historical volatility range. Despite widespread confidence in NVIDIA's performance, risks remain, particularly concerning China. While NVIDIA may beat estimates, revenue from China is expected to fall below historical levels, compressing margins. The Chinese government has been discouraging local companies from using U.S. chips, especially in government applications. This geopolitical tension poses a significant challenge for NVIDIA, as the company has historically relied on the Chinese market for a substantial portion of its revenue. The halt of NVIDIA's H20 chip sales to China earlier this year resulted in a significant revenue loss, approximately $8 billion for Q2 alone. China accounted for around 13% of NVIDIA's total data center revenue, which, while modest compared to the U.S. market, is still notable. Although NVIDIA can resume selling H20 chips to China, it must allocate 15% of revenue from these sales to the U.S. Treasury. The trend indicates lower revenues in the region, compounded by stockpiled inventory, as Chinese companies had previously placed substantial orders before the ban. This situation suggests that even if licenses are restored, immediate demand may be weaker as companies have already fulfilled their AI infrastructure needs. The critical question remains how significantly the China issue will impact NVIDIA's ability to decisively beat guidance and robustly raise Q3 guidance. Any indication of revenues below $52.5 billion would fall short of market estimates, potentially leading to a negative market reaction. Analysts and investors will be closely monitoring NVIDIA's commentary on this front, as guidance for the upcoming quarter is crucial. If NVIDIA signals a slowdown in growth or a failure to capitalize on the Chinese market, it could dampen investor sentiment and lead to increased volatility in the stock price. Trading at 48 times earnings and 40.4 times forward earnings, NVIDIA stock still appears attractively priced given its earnings growth potential. The long-term earnings per share estimate for the next 3 to 5 years stands at 29.8%, resulting in a PEG ratio of 1.36, comparable to semiconductor peer AMD, and a discount compared to other Magnificent 7 peers, except Alphabet. This valuation suggests that investors are still optimistic about NVIDIA's growth trajectory, viewing the stock as a long-term investment opportunity. The strong growth estimates indicate that NVIDIA is not just a short-term play. Rather, it is a company that is expected to continue thriving in the evolving tech landscape. As the demand for AI and machine learning continues to rise, NVIDIA's role as a key supplier of the necessary hardware positions it well for sustained success. Overall, NVIDIA stock seems undervalued based on its growth story, not due to market mispricing, but because its rapid growth makes even seemingly stretched valuations reasonable when weighed against its ongoing trajectory. The company's ability to innovate and adapt to market demands continues to set it apart from competitors. NVIDIA's focus on research and development, coupled with strategic partnerships, ensures that it remains at the cutting edge of technology, further solidifying its market position. Market analysts overwhelmingly rate NVIDIA as a strong buy, with 36 out of 40 ratings bullish, 3 neutral, and only 1 bearish. The average stock target price for NVDA is $199.94, suggesting a potential upside of around 11% over the next year. This consensus reflects confidence in NVIDIA's ability to navigate challenges and capitalize on growth opportunities. As NVIDIA approaches its highly anticipated quarterly earnings, the odds are in its favor. With chip supplies sold out for the next year, the growth narrative remains robust. While minor details such as concerns regarding China may introduce short-term volatility, the broader outlook for NVIDIA remains strong. The company is well-positioned to continue its upward trajectory, solidifying its status as a buy. Thank you for watching. If you found this information valuable, please like, subscribe, and hit the notification bell for more insights from Investing Alpha.